Let's look at the importance of investments. And we have observed that, sometimes SME owners, just like you, you say, okay, you know what, Sarah, I've got my business, it's up and running. But the fact is that when you're not conscious about other, other investment channels that are available to you, it becomes very difficult to enter, to become a player in some of these fields that are available for you. And this is how we want to to help you. So last time, recall that we said that savings are not an end in themselves. Savings are a means to an end. And what is that end? What is the end goal? It is investments. And so assuming that you have a substantial amount you have gathered, you have accumulated, you've made your money grow for you, what we were talking about in the savings, session the other time. So the next, the $1 million question then is what next, and this is what we want to, talk about. An investment is an asset. It is an item that you acquire, that it is acquired with the goal of generating income or appreciation. And this is not the first time we're looking at the word asset. We are in course number 8 in the financial literacy program. And we agreed that when we talk about an asset, this is a business resource. It is a business resource, and we talked about the different classes of assets, short-term and long-term. So an investment is an asset. The other word that just looking at that definition is a goal. It's you acquire this asset with a goal of with a certain goal in mind. So that tells you that you want to maybe make money, you want to make a profit, so you need to have a goal. And that's why I was telling you that it's important for you to set goals, to have those investment goals in place. And then there's also about something there about appreciation. So this asset that you have you have put your money in, you expect that it will increase in value over a period of time, and it will create, wealth and income for you. So that is what we mean when we talk about, an investment. Investments help you to beat inflation. Whenever you give us feedback, we always listen with a big ear. And I think one of the feedback, Chakacha, if you remember last time, they were saying, okay, savings, we put our money in savings because we expect them to grow. But the interest, the return is kidogo, small, but our funds are secure. So now when you talk about investments, this is where the returns are higher and they help you to beat the effects of inflation. So that's one good reason why we need to combine savings and investments, because investments will accelerate your business growth and returns in terms of returns. Another reason why investments are important is because they help you to build wealth. Okay, I know sometimes, we look at where we're observing a generation of young people who are growing older and older. And these are the same people who are getting into business. And they think that wealth is acquired, those microwave solutions, and you want things to, to happen, quickly. When we're talking about building wealth, it is for the long haul. Last time we talked about the magic of compounding, and that magic of compounding we're able to see it works more effectively for you over a period of time. And the longer the period of time, the better it is for you. And that's another reason why we put together these webinars for you, so that you can get skills to help you grow stronger and create wealth over a period of time. So those are some good reasons why we need to consider investments and take them more seriously. So when you're considering where do I put this 1 million shillings? These are some of the things, and it's, the amount of money that you have available for investment. Number one, you need to match. There's a match between risk and return. The ease of converting into cash. So here, maybe you'll be asking yourself, how easy is it for me to convert my investment into cash? Because some options, once you lock up that money, it's locked up, and perhaps if you needed to liquidate it or to cash it, what then are the implications of that? And I know that Timothy is going to tell us more about this. The other thing that you need to consider is the income level. The other thing you're going to consider is the time period, the time horizon. How long am I willing to invest that 1 million shillings of mine? So there are different investment options. Some of them could be more shorter term, and some of them could be more longer term. So it's upon you to answer, what kind of time period am I really looking at? So that time consideration is very, very important. Another one is the tax implication. What are the tax implications of this return, this income that I am looking to earn? Now that we are clear about some of the considerations, some of the questions that we must ask about investments, now we can then move one step forward and look at now the options. Let's consider these options. The first option you see there is business. Now I have another category of investments here, and those are shares. When we talk about shares, we're talking about ownership. It's an ownership interest. You have an interest in that particular company where you have bought a share. As you can see there from the diagram, you've bought a portion. Yes, Andrew, I agree with you. You bought a portion of that. And so your share, those shares that you have bought, is an investment that you have made in that company's assets and company's earnings. You have lent money to that particular company so that they can trade, and at the end of the trading period, at the end of the year, they will compute the return, and they're going to share that return to you, which is what we refer to as dividends. And then as you invest in those shares, you over a period of time, as you monitor and track the progress of the profitability of that particular company and the increase in share prices, you have an option to sell. And when you sell, you make a profit. And so you have achieved your objective, of buying shares. So that's another investment option that is available to you. Another one is bonds. So I saw some of you saying bonds. What do you have in mind? What do you have in mind? So Jimmy, as they give us feedback, I'm going to pass the mic over to you, and then you can tell us what do our participants mean when they talk about bonds. Our participants, just share your mind, share your thoughts. Jimmy, over to you.
All right, thanks, Sarah. So as we wait to hear what bonds are, there was submission previously on shares, and Anne had indicated shares from institutions that have growth in dividends. Andrew had indicated ownership of equity in a firm. And then there was one from Gil, says buy tiny ownerships. Okay.
Tiny ownerships, I like that.
Yeah. On bonds, Jerome says investing in securities. Anne says, Anna, that is long-term government fundings. Okay. Zachary says government bonds. Okay.
So I agree, and thank you, Chakacha, for that feedback, and thank you so much, our participants, and we're reading from the same page. If I was to make it simple in my own, if I was to simplify it, I would say that with bonds, this is where you're actually lending money to a company or to the government, with the understanding that you will receive a payback in terms of interest over a defined or a set, period of time. And so, for example, like if you bought bonds, we've been seeing the government has been, advertising. I've been seeing, like in the infrastructure bond and so on. And in that arrangement, they will pay you after every 6 months. You can expect a payment after 182 days in terms of interest. So you're paid 2 times in a year, and then of course at the maturity of that period, you are guaranteed that you will get back your investment, and you have profited from that investment. When we talk about a mutual fund, this is a group of investors who come together with a common goal. They have a common objective to increase their wealth. And so in these mutual funds, they will appoint a fund manager, and that fund manager will make decisions about what is the best combination of investment products to take on for the benefit and welfare of the group. Another investment option is real estate. And this is where Kenyans here, we come in and we come in, strong and big. And so when we talk about real estate and property, we're thinking about land, we're thinking about, buildings, whether they are, commercial buildings, residential, buildings, and so on. So that you invest, that's an investment option that is available to you. And why do we do that? Because we know that these assets appreciate, they grow in value over a period of time. And then the last group or investment option that I would like to talk about is about commodities, natural resources. Yes, indeed. I often used to observe, the holdings of land, that is used to plant, wheat and barley and so on. Those are investment commodities. The fact that maybe you can do a forward contract with the EABL, and you're sure that you will be able to, offload that. You can get into a contract. And in case of, financing, I think maybe perhaps Timothy will tell us more of how you can trade with those real contracts, in the process.
And again, I understand that personal finance or our finance is not as professional as it is. It's personal, and I will say this, that in making financial decisions as a person, then we don't make them very optimal. Why? Because we have something called constraints. I'm a financial professional. Jimmy and I think Salah also, and Winnie and maybe a lot of us here. I understand there are a lot of CPA people here. We are financial professionals. But what you'll agree with is it's different when you're making your personal investment and when you're making when you're mandated to make an investment for maybe your employer. It's different because for you have very many constraints, and these constraints they make they compromise how much we are able to make these decisions. So part of this constraint is what we call we are constrained in terms of information. How much information do you have? Information regarding even how many investments are available. I saw Salah put a question out there that where do we put our money? Where do we invest? And there are so many answers. And what we agree is that we are not knowledgeable of all investments out there. We are not knowledgeable of all the risk characteristics of the investment. So sometimes we just make decisions based on the available information, which might not be sufficient to make an optimum decision. Number 2 of the constraint we have is time. We don't have time to realize some of these investments. So we don't have this time to analyze, keep analyzing, because time is passing, and we are cognizant that every time that passes without making these good decisions, then we are compromising our total wealth because we are already depleting our human capital. Human capital will decay whether we like it or not. But I want to touch on very important one called the framing bias. It's how information is framed to you, and that is how you make investments. How information is framed to you. I can frame information differently and make you make the same information differently, which makes you make very different decisions. So we have to be aware of such these biases, and especially another one, a very interesting one called availability bias. And I remember this because it's very relatable, just and has made a lot of people make bad investment decisions. It's called availability bias, and this is tendency to go with the hot ideas out there, right? What people are talking about, what is the newspaper talking about. And I remember not very long ago, we had a case of quail businesses. You know, everyone is making money apart from you, and you dive into it. When you have these savings, we've made savings, as Salam Bichi has taught us, and we have the savings, and where do we put our money? We make that decision based on the most available information. We don't go deep to understand what kind of investment we are doing, and it really compromises the whole issue. It really compromises our ability to make good decisions, because every time you jump to a hot idea without understanding, then it's very likely that you fall a victim. And people are falling a victim of pyramid scheme because you don't take time. You know, and these people who sell this pyramid scheme know that you suffer from availability bias, so they'll hype their ideas to the maximum to make you fall a victim of it.